account where they will never make losses, all right? They will never make losses ever. They will have consistent growth over time, all right? A lot of people right now, I know for some of you who have 401k, whether it's 401k, whether it's 403b, whether it's SEP, IRA, or whatever, if you take note, unless you've not been checking your account, but if you've not been checking, please go check. You are losing monies big time. You are losing monies big time. I'm not a prophet of doom. I'm just telling you what is happening. All right, we've entered into a recession. You just heard a few days ago, SVC, Silicon Valley Bank, all right, just crashed. Signature Bank in New York just crashed. Most of the big banks, in America, as I speak with you, they are shaking. They are shaking seriously. Guess who is coming to their rescue? FDIC, Federal Deposit Insurance Corporation, is coming to their rescue. The federal government insurance company is coming to their rescue. All right. So I just want to let you know, in case you have a 401k and you've not been checking, please go check. If you've been checking, you will agree with me that you are losing monies, correct? You are losing monies. We want to help you stop further prevention of losses. We want to help you prevent further losses by helping you move it to an account called annuity, all right? And the good part is not just annuity, indexed annuity, meaning that you will never make loss, you will have guaranteed growth, and also, if you prefer, you can also have income for life, all right? That's what we do, retirement plans. We do life insurance. We are big on life insurance as well. We do long-term care, college plans. Maybe you have kids. I know that you definitely want your kids to go to college. The best time to start saving for them is now. Maybe you have grandkids and you love them so much, you also want to save for their college. The best time to start right now is now, like right now, all right? We also have indexed universal life. And one thing before I go into the indexed universal life, some of you don't know that those plans you have for your kids with the bank called 529, those plans you have for your kids in the bank called 529 can disqualify your children from getting scholarship. The banks will not tell you that. The banks will not also tell you that in cases of emergency, maybe you need monies from those accounts, your own money you're saving, all right, in those accounts, that you cannot take it out unless it is educationally related. If you do so, you will be penalized, all right? Some of us don't also know that, okay? Some of us don't also know that you can lose all of the monies you put in those accounts in the 529 plan. So most people don't know that, all right? But we have better plans using the IUL to help you strategize on how you can save for your children's college long-term, all right? The Index Universal Life is a very powerful product as well. We do executive bonus plan. Maybe you are on this call. You run your own business. You run your own business and you are paying a lot of taxes, all right? You want to reduce your tax burden. We can help you with the executive bonus plan, all right? We can help you with the executive bonus plan. Or you own a business, but you don't even have any retirement plan at all, no retirement platform. We can show you how you can, through your business, all right, save for yourself, right, towards retirement tax-free, growing those monies over time with compound interest. We can show you how to get that done with the executive bonus plan. Legacy planning, all right? Legacy planning, we do that as well, to leave a resounding legacy for the next generation, okay? To make sure that all of the assets and all of the monies you have right now, to pass it to the next generation, it will not be burdensome. It won't go through probate, okay? It will just pass on to them and also pass on to them tax-free. Wills and living trust and a whole lot more, okay? Now, for those of us who are familiar with these companies, I know some of us will be familiar with these companies, Pacific Life, Prudential, Nationwide is on your side, Transamerica, Alliance, Athene, Everest, Franklin Templeton. I don't know if you are familiar with any of these companies, but the one thing I want you to do, in case you are not familiar with them, or in case you've just seen them, like in passing, right? Pacific Life has been doing business for over 154 years. These are solid companies. They are the biggest and the best when it comes to financial services. Multi-billion-dollar companies, resuscitating banks and giving banks the right support that they need. Transamerica, in case you don't know, since 1904, they've been doing business. Owner of Bank of America, all right? Very solid company, multi-billion-dollar company, okay? These are just a few of the companies that we represent and partner with, all right? We have over 180 companies that we partner with to help people secure their monies, secure their family, secure their legacy, set up college funds, retire tax-free. Isn't that amazing? That's what we do. I just told you guys when we started that we are big on financial literacy. We are big on financial literacy. We believe that every family in the United States deserves financial education. That financial education is not an option. It's a must. It's a necessity. Okay? Because over time, all other businesses you must have heard of, right? They send you mails sometimes. They send you mails sometimes to your mail boss. They always want you to spend money. But do you know what we do in our organization? We teach people how to save, invest, not just saving and investing, but saving and investing in the right account. We also teach people how to reposition their monies for the now and for the future. Because we understand that three things are most important to us: our health, our family, our income. All right? Our health, family, and our monies, very, very important. And you guys will agree with me that your health is very important, because if you're not healthy, you can't take care of your family. All right? Your family is very, very important as well. Then monies. Everybody works for money, but how many people know how to make money work for them? So we teach, we simply educate, show people that money have rules. The simple rules of money. You see these three rules you see on my screen? The rule of 72, how money grows, how money gets taxed. These rules are very, very important. They may look very rudimentary, but they are very important. These rules are not respecter of persons. They don't respect persons. If you know how to apply these rules over time in your savings and your investments, you can accumulate wealth. If you don't know how to, you will pay dearly for it. The first rule you see on my screen is the rule of 72. The rule of 72 was invented by the great Albert Einstein. And Albert Einstein simply used this rule to show us how long it will take to double our investment at a certain rate of return. Let me say that again. How long it will take you to double your investment at a certain rate of return? Take this example, very quick example. This young man at the age of 29 invested $10,000, all right, at 1% rate of return. How long will it take him to double $10,000 at 1%? To get that, you simply divide 72 by the percentage rate. 72 divided by 1 will give you 72. It will take this young man, imagine that, 72 years to double $10,000. I want you guys to think for a moment. How much does the bank give you? Because most of us have our life savings in the bank. We think it's the best place to keep our monies. Okay? How much does it? The last time I checked, I don't even know if right now, is 0.01%. 0.01%. You know what that means? If you do the maths according to the rule of 72, it will take you 7,200 years to double any monies you put in the bank. So I want you to have a routine. I want you to have a routine. Where am I keeping my monies? Where am I investing my monies in the long run? On and on it goes. At 6%, every 12 years, the investment doubles. At 12%, every 6 years, the investment doubles, correct? Now, if you look at it, the same initial investment of $10,000, all right, different rate of return, 1%, 12%. This guy at 101, if he will live up to 101 years, at 101, he will be retiring with $20,000, if that was his retirement, all right? But this other guy, same initial investment, different rate of return, he at 71, he will be retiring with $1.2 million. You know what we do for our clients? We help them do two major things amongst others, two major things. Number one is to make sure that they can have a legacy of $1 million for their family in the event that they pass or something happens. At least $1 million will pass to their family tax-free. And also that they can retire with $1 million tax-free. That, hear me and hear me good, that they can retire with $1 million tax-free and also help and also leave a legacy of $1 million for their family in the event that something happens. That is for the first rule. Now, the second rule, as you can see on my screen, is how money grows. How money grows. Do you know that you can grow monies like you grow trees and flowers? Yes, you can grow monies. Over time, you can grow monies. There are three major accounts you can use in growing monies. The first is fixed, all right? A lot of us are familiar with this. Example of the fixed account, savings account. I know everybody on this call, if not everybody, we have savings account, all right? That's where most people put their monies. You cannot grow monies in savings accounts. You know why? It is a fixed account, fixed. Fixed. What is the meaning of fixed? Fixed means fixed. It means that it doesn't change. All right? It doesn't change. There are no potential of growth. So it is fixed. Okay? Now, the third rule of money is how money gets taxed. Now, each time you are investing, these three things, you must put it into consideration. Number one, how am I going to get credited? Simple interest on compound interest. Number two, which account am I using to grow my monies? Which account am I using to grow my monies? All right? If you are using fixed, you are not using the right account. Okay? Number three is, when I grow my monies over time and make profits, gains, how will it be taxed by Uncle Sam? You know, Uncle Sam, we are related to one, we will all have one uncle in America, Uncle Sam. All right? Uncle Sam always take out taxes from us. How will my investment be taxed in the short and long run? Very, very important. For the fixed account, you get taxed now. By tax now, we mean maybe monthly. It may be between 1 month and 12 months. Tax now, all right? And we all get that with our savings account. We get taxed now. The second account, very popular. I know you are familiar with this account already. The second account is variable account, variable. Do you know that over 90% of the people globally, they use variable account to invest? How do I know? Investment in stocks. I know now it's driving home, right? Investment in stocks, investment in cryptocurrency, all right? Now, what is variable? Variable means what? It fluctuates. It goes up and down. Variable means it is unreliable, it is unstable, it is unpredictable. You can't predict it. You can't rely on it. You see, investment in stocks, investment in cryptocurrency. But the most painful of it all, the most painful of it all is 401k. It's 401k. Millions of people across the United States, they use 401k as their retirement platform. It's the only retirement vehicle they have. It's the only retirement vehicle they have. And with 401k, you cannot predict your retirement. I know you guys are feeling me right now. For those of you who have 401k, if you've been following your account closely, you see it goes up, it comes down. I was talking to a lady a few months ago, and she said, you know what, Solomon, I believe in life, sometimes you win, sometimes you lose. I say, well, but do you know that it is not compulsory to lose monies? It is not compulsory. I don't gamble with my monies anymore. It is not compulsory to lose money. You mustn't lose monies, all right? She said, but you know what? Each time I make a loss, sometimes it takes between 1 and 3 years, it will bounce back. Let me do a simple math for every one of us on this call. If you have $100,000 in your 401k, please, I want you to follow me very carefully. If you have $100,000 in your 401k and the market drops by 50%, what happens to your $100,000? What is left? 50,000, correct? 50,000 will be left, okay? The market dropped by what? 50%. $50,000 will be left in your 401k account. If the very next year, the market makes 50% gains, all right? What will your profit be? 50% of 50,000 is what? Is 25,000. 25,000 added to the $50,000 left in your 401k account. What is that? Is 75,000. So even if the market makes a loss of 50% and a gain of 50%, you don't come back to 100,000. You are still losing $25,000. And that is what happens to people with 401k in their working years. So they end up not predicting how much they can retire with, losing more than they gain over time. And remember, they are the ones contributing to these plans. Now, we show people better plans. We show people better plans to retire. And I'm going to show you very, very shortly. And you know the painful part of it again is that they also take out taxes. I live in Houston, Texas. In Texas, as I speak, the taxes taken out from 401k is between 20 and 30%. We have what we call the 59.5 rule. If you are not up to 59 and you are retiring, if you're not up to 59 and you are taking out your 401k, you will be taxed 30%. You know that already, right? If you are up to 59 and above, you will be taxed 20%. They give you a 10% discount. However, they still take out a huge chunk out of the monies they've gambled with. So I want you to think about it, all right? But we can help you. In case you are making losses right now in your 401k, we can help you simply move it to somewhere that you will never make losses and have guaranteed growth for life. The third account I want to point you to, very important, is the indexed account. Indexed. I know this account is not too popular, but you know the good thing about the index account? It has market protection, meaning that you never make losses. You heard me right. You never make losses with index strategy. You know why? You participate in gains when the market makes gains, all right? When the market crashes or crumbles, you know what happens to your gains? Your previous gains will be locked in, right? Participate in gains, it locks in the gains. Your principal is protected. Your previous gains are locked in. When the market makes losses, you do not participate in losses. You don't participate in losses with index strategy. And guess what? It has tax advantage. What does that mean? You don't pay taxes at all. You don't pay taxes at all. The first time I said, I remember last year, November, I was in Oregon, right? I was in Oregon and we're doing this seminar, financial literacy campaign. I was talking to these big guys, most of them were making six figures, solid six figures. And I told them about the index strategy that they don't have to pay taxes. And one of them, said to me, Solomon, are you saying that there's an account in this country, United States, where we even pay taxes for the air we breathe, that there's an account we can use to grow monies over time and not pay taxes? I said, yes, there's an account. He was still doubting. And I asked him two questions. When last did you see your doctor? He said, 6 months ago. I said, awesome, wonderful, right? I said, when last did you see a financial professional? He was dumb. He has never in his lifetime seen a financial professional. So how are you going to get this knowledge if you don't see a financial professional? And that's what we are doing right now. Tax advantage. So the question I pose to you today is, would you rather pay taxes now, later, or never? I know your answer is a no-brainer. I heard you say never, like you were shouting never, never. And it's legal, right? Absolutely legal, okay? Absolutely legal. Now, the next thing I want to show us, but remember we just talked about the index, that you never lose money with index, all right? One of our products I showed you guys with the very first slide I shared was Indexed Universal Life. Indexed Universal Life. Probably some of you must have heard of it in passing. Some of you may have not heard of it at all, right? Now, the Indexed Universal Life, firstly, is a type of a permanent life insurance policy, but it has an investment component. Now, I did not say it is a death insurance. People do not know how to make the distinction. A lot of people say, Solomon, you know what? I have insurance. I have insurance, right? What they have most times is death insurance. What is death insurance? We have two types of death insurance. One is called term life. Term life. Maybe you are here on this call and the insurance you have will last for 10 years or 15 years or 20 years. Why would you have an insurance that lasts for 10 years, 15 years? Do you have a contract with death? That's the first question. Are you planning to die? Number one, all of the monies you pay into that plan will be wasted. And 98% of term life owners, they outlive their policies. So why waste your money and why sign contract with death? That's the question I ask. But you know what? Any insurance that you have that only pays out when you are dead is a death insurance. Okay? But in the case of the Indexed Universal Life, which is the IUL, it is a life insurance. And I will tell you, I will give you all of the reasons. Now, even forget about life insurance right now. Let's look at the benefits. Let's look at the features of this account. Number one, it has cash savings with compound interest. All right? Just like you are paying for auto insurance. Do you know that even if you drive for the next 50 years in America, auto insurance companies will not give you a dime back, but you are paying judiciously because you think that when you get pulled over, you'll be given a ticket. So you are paying it mandatorily, okay? And do the statistics. About 1% of us gets involved in a fatal motor accident. 1%, right? 1%. You don't get anything back. In the case of IUL, okay, you have a life insurance, but as you are paying your premiums, you know what happens? You are saving monies with compound interest. You have cash savings. So you are paying your premium. Part of your premium saves up for you with compound interest. All right. Now, number two, you provide financial protection for your family. We are so big on financial protection. I always ask people, you may be making a lot of monies right now. That is good, fine, awesome. If something happens to you today, some of us say, Solomon, I'm very good. I make six figures. I make good monies. I have a business. If something happens to you today, if you pass today, I know this is a conversation that we don't like hearing, but I'm going to say it again. If you die today, is your family where you want them to be financially? If you die right now I'm not talking about tomorrow. If you die right now, it's your family. You have a family, a beautiful family that you adore. You have wonderful kids. You can die for your wife and everybody that relies on you. You always say it, all right? But if something happens to you today as a breadwinner, if you are taken out of the equation, is your family where you want them to be financially? If you have that big house that you have and you are still having a standing mortgage or whatever, all right, if something happens to you as the breadwinner, all right, can your family still retain their financial lifestyle without you? Can your kids still go to college, all right, whether you are here or not? I want you to have a routine because these are realistic questions. Life happens. It can happen. So we make sure that our clients get their family protected financially in the event that something happens. Generational wealth transfer, legacy. We all want to leave a resounding legacy. I know this is not popular in our community because in our community, the average Black man in the United States, in our community, the wealth dies with the wealth creator. The wealth dies with the wealth creator. All right? We do not have the proper tools to transfer generational wealth. And this is the cheapest means to transfer wealth. Because the good thing about IUL, it covers your now and your future. If you die now, you transfer wealth to your family. If you live long enough, you grow monies with compound interest, all right, to enjoy your retirement age tax-free. Tax-free. And it's not like the 401k that has restrictions. You can't take out monies without penalty unless you are 60 years and above. In this account, with the IUL, you can take out monies anytime. You have access to your cash savings anytime. No restriction, no taxes. You don't even have to pay it back. Amazing, right? Your cash savings is protected from market losses. Unlike the 401k, you can lose your monies. 2008, global economic meltdown. You saw what happened? People committed suicide. They lost all their monies in their 401k. COVID started. People lost monies in their 401k. As I speak, we're in a recession. People are losing monies big time in their 401k. I have a lot of clients that we're helping right now, so I know what I'm talking about. But with the IUL, your gains are locked in. Your gains are not borrowed. Whatever gains you make remains in your account for life. No mandatory distribution, unlike 401k with ROMD. If you are 72 years of age, you have 401k, you've not taken out monies, the government will force you to take out money. You know why? They want their taxes as soon as possible. If you don't take out money, they will tax that money up to 50%. Yes, it does not create taxation of Social Security benefits. Okay, no tax. If you have monies coming out from the 401k, 401k, and you are making more than $25,000 in a year, single, as couple, $35,000, your Social Security income will be taxed up to 80%. Yes, but if you have monies coming out of your IUL by the time you retire, it's tax-free. Tax-free. Does not create taxation for your Social Security benefits. It has living benefits. Remember, I told you guys that we help our clients reposition their monies for the now and for the future. What do I mean? What do I mean? What do I mean? You can have $1 million coverage, and you are paying just $800 per month, all right, into this plan. It means that if the person dies the very first month of his policy being approved, $1 million goes to the family tax-free. That is protection for the now, right? If the person falls sick, critically, chronically, or terminally, all right? If they fall sick critically, chronically, or terminally, to the point that they cannot work for 3 months short-term, 6 months and above long-term, you know what happens? They can take out monies from their death benefits, up to 90% in their lifetime. Can you beat that? Can you beat that? Just imagine somebody we've had a lot of cases. I don't want to tell you guys too much stories, but we've had a lot of cases of people who fell sick critically. They couldn't work. They have bills. They have a family to take care of. They had just $5,000 in the bank. That was all they had access to. Within a month, they are bankrupt. They will lose their house, lose their cars, even lose their family because they have no income coming in. This account is an income protection. If something happens to you medically, critically or chronically or terminally ill, you can be taken out of your death benefits in your lifetime. So you don't have to die to enjoy the benefits of your plan. Isn't that amazing? We call that income replacement. Competitive rate of return. The historical average has been between 7 and 12%. Compound interest, not simple interest. No minimum age or income requirement to set up accounts. We set up this account for our kids. And why do we do that? To secure their financial future. That's what wealthy people do. That's what smart people do. That's what Caucasians and Jewish Americans do. They secure their children's financial future. We have what we call the $1 million baby policy. You set that plan for your child, all right? You pay few bucks monthly. By the time that child gets to their earliest retirement, they retire with $1 million tax-free, okay? You can also use this plan to set up a college plan for your kids, your grandkids. Set up a college plan for them. You save for them. What if they get scholarship later on in life? Awesome. The monies they have in there, they can use it to start their life, start a business, buy their first house, buy their first brand new car. Is the best wedding gift that you can give to your kids, okay? Now, one of the most awesome part of the IUL is that it is tax-free. So it can provide you tax-free retirement income. Tax-free retirement income, okay? That's what I'm using right now for my retirement, the IUL, right? To provide me tax-free retirement income eventually, because I am not gambling with my monies anymore. I don't gamble with my monies anymore, okay? So I know you guys are following. Now, that is for the IUL. We use the IUL for a whole lot of things, including retirement. We also have what we call annuity, fixed index annuity. All right, this one also is geared towards retirement. Now, the major reason people need annuity. Number one, do you know that as I speak, 72% of Americans are unsure of their retirement? I'm not asking you to reply me, but ask yourself, do you have a formidable retirement plan? Just answer that question. I'm not asking you to, I don't want you to tell me. Do you have a formidable retirement plan? Do you know your retirement number? Are you sure that you will not run out of money in retirement? Ask yourself that question, all right? Ask yourself that question. Now, there are two purposes for having annuity. The first is growth and accumulation. Some people, annuity simply means series of payments made over time. It's an account that you can move lump sum, all right? Let's say you have a 401k account. You can move it lump sum into an annuity, all right? Now, some people may just put that money there for growth and accumulation for like 5 or 10 years. They allow the money grow for 5, 10 years. 10 years, the expiration, the maturity date, which can be 5 or 10 years, then they take out the lump sum. They can do that. However, the second purpose, some people want growth. They want their money to grow. They want peace of mind. At the same time, they want income for life, all right? They want to be able to get income for life. Why? So that in their retirement years, they will not run out of money in retirement. That's the greatest fear right now in America. The greatest fear right now in America is not the fear of death. It is the fear of people running out of money in their retirement years. And we have these plans to help people called annuity, all right? Now, there are sources of annuity funding. Maybe you are asking, Solomon, how do I set up an annuity account? How do I set up an annuity account? Maybe you are asking, how do I set it up? Where do I move funds from to set it up? There are two sources of annuity funding. The first, as you can see, is called non-qualified. Non-qualified because it has already been taxed. Example, the monies you have in your savings account. I used to know somebody in Houston here. She's a pharmacist, came to America a few years ago, you know, and she saves all her monies in the bank. She has over $300,000 in the bank. Every time she looks at the alert and she smiles, all right? But that is the most unwise, uneducated financial strategy, putting over $300,000 in the bank. She can simply move it into an annuity, all right? And it will grow consistently over time. She's a very young lady, in her 30s anyway. Now, number two can be CDs. Maybe you have a lot of money in the bank, and it is just there. Bank is making millions of dollars with your money. You're not getting anything back. It's time to move it into an annuity to make more monies and have guarantees. Maybe you have CDs, and they give you 2.5% every year. Every year, you are required to report your little profits to IRS, and they also even take out taxes, okay? Maybe it is brokerage account. It is time to move it. Existing annuities, maybe old annuities without much benefits, you can also move it. Maybe you sold your home or sold a business, and you just go put all the hundreds of thousands of dollars in the bank, and you are taking little by little from it. That is not a smart strategy. You can move it into an annuity, right? You make a lot of monies as well while you are pulling out income for life. All right. Probably lottery winning, or you won a court case and you were paid a lot of money, is in the bank. You can move it into an annuity. Already taxed monies. All right. The other side is qualified. When we say qualified, it means that the government is looking to it to tax deferred accounts that you paid in monies before taxes. All right, pre-tax, funded by pre-tax monies. 401k, 403b, SCP, IRA, Roth IRA. These are examples of the qualified account. Probably you've worked with companies before, your previous companies. You left your 401k there. The money you just allowed them to gamble with your money. It's like giving your bank ATM to your ex that you had a bad breakup with. How can you leave your 401k, your previous account, and just allow your company that you are no longer with to be managing it? You are losing monies big time. Simply move it into an annuity. And I will show you the reasons why you should move it into an annuity. Okay? The reasons, solid reasons. Benefits of fixed index annuity. Number one is guaranteed protection of principal. Your principal is protected. You will have rest of mind. Number two, your gains are locked in because of index strategy. Number three, protection from market risk. You have rest of whether the market goes up, come down, crumble, economic depression or recession is none of your business. You have no fear because you will not lose a dime. All right. Number four, free management. Free management. All those fees that Fidelity and others take, regardless of whether you make profit or not, it doesn't apply to annuity accounts. It's free management. Lifetime retirement income. Possibly you are here and you want to make sure you have steady lifetime retirement income. Annuity is the way to go. Flexible withdrawal and liquidity. In cases of emergency, even if it is not up to the maturity date, you can take out money from it as well. It also has a death benefit. What if the annuitant passes, right, before he takes out all of the monies in the account? Whatever is left will be paid to the beneficiaries as death benefits. All right. It doesn't go through probate as well. It doesn't have to pass through a legal process. It has guaranteed minimum rate of return. Guaranteed minimum rate of return. Sign-on bonus. I want you to listen to this very carefully. Very wonderful. Whatever amount you move into this account from day one, they give you a sign-on bonus between 10 and 35%. I have a client who just did that for, right? She moved in almost $300,000. She was given 25% bonus from day one. 25% bonus of $300,000. I will leave you to do the maths. That's what was added to the money she moved from day one. All right? Tax-deferred growth. No penalties for rolling over monies. You will not be penalized for rolling over monies because there's a law that guides rollover. You don't get penalized or you don't pay taxes for moving your money from a government qualified account into an annuity. No penalties. Long-term care. Okay? I'll just show you one of our products. I know a lot of you have it. I know you have a lot of questions. All right? This is just an overview. We are going to schedule a one-on-one appointment with everybody because we know you have an individual financial need so that we can have that talk and look at the best strategy that will fit you. Okay? Now, this is just one of our products called Ascent Pro 10 Bonus. It is with one of our providers called Athene. Athene is a very strong and reliable company that has been doing business for over 100 years. Now, this product, the minimum age to set it up is 35 years. The maximum age is 80 years. The minimum premium or initial investment that you can use to start up this account is $10,000. The maximum premium you can put up to $2 million. All right. Now, the sign-on bonus, whatever you move on to start that account from day one, you get 25% bonus. 10% guaranteed simple interest rate. Can you beat that? 10% guaranteed simple interest rate. What that means is worst case scenario, no matter what happens to the market, all right, you get 10% simple interest rate. Worst case. Do you see this? Do you see the next point? Can you see the next point? Additional interest credit, if applicable. Additional interest credit, if applicable, which means that when the market makes more than 10%, whatever the market makes more than 10%, will also be credited to your investment. Income rider that can be turned on within or after first year, meaning that if you set up this account today and possibly you want to start collecting income monthly, you can turn it on regardless of the maturity date. Even if it is for 10 years, but you can turn on the income rider from day one. Income doubler. What does that mean? The company will double your income if the client move to a qualified care facility like nursing home, right? Maybe there's an LTC need, long-term care need, and the client happens to be moved into a nursing facility. If the client was getting $2,000 before as income, it will be doubled to $4,000 for minimum 60 months, which is 5 years. All right? Amazing. These products are amazing. These plans are amazing. And I know you guys have a lot of questions. All right? But I just want this to sink in, and we can do a one-on-one. You can, if you are in Houston, you can come to the office. Our office is in Houston. If you want a Zoom, we can do Zoom. Then if you want a special arrangement as well, we can also come to you to show you the best plans that fits you. Okay, in the next few minutes, the next 5 minutes, I'll run numbers. I want to show you guys numbers, real life numbers of how we are using this plan to help a lot of people. But today I'll be showing you just Index Universal Life, the IUL. I'll show you how you can use the Index Universal Life to, number one, protect your family. Number two, protect your income. Number three, protect your health. Number four, retire tax-free. Okay? 4 things I just mentioned, and I'm going to show you right now. Okay, I'll be sharing my screen and show you how you can do this. That is what I'm doing right now as I speak. That's what I'm using. The IUL is the best retirement strategy ever. Okay? But it's not popular because the government doesn't even want you to know about this. The reason you've not been hearing about this on TV, I know some of you are wondering right now, why is it I don't know about these things? The reason you've not been hearing about it on TV, even if I'm licensed, I can't go on TV to air this. You know why? There are serious advertisement restrictions placed by the government on advertisement. So I can't even do it. If I do it, my license will be suspended. Imagine that. Why don't they want you to know? This plan has been existing for over 106 years. Why don't they want you to know? This plan was used by Walt Disney, the owner of Walt Disney, right? He borrowed from this plan when no bank gave him loan. This plan was used by J.C. Penney to build a very wonderful company that we know today, all right? But it's not popular because of the advertisement restriction on these products. When was 401k invented? 1978. Why is it more popular than this plan? That's what you should ask yourself. Because the government has nothing to benefit. They can't take out taxes from this plan. So you are not supposed to know, all right? So I'm going to show you an illustration. And let's use a 40-year-old man, okay, 40-year-old male who wants to retire with at least minimum $1 million tax-free. Let's see how we can make that happen. 40 years old male, let's say this guy is taking $1 million coverage. Now, the lowest coverage amount you can take is 100,000, all right? But you can take in millions. You know your financial capacity and what you can start with, all right? But what I want to run for today is to just show you how you can use this plan to retire with at least $1 million tax-free. Sounds good? Okay, let's see how we can get that done. So we take $1 million coverage, death benefit, and let's do monthly. And we are looking at the average retirement age in America right now is 67 years. Retiring at 67, average, but you can decide when you want to retire. It doesn't matter. This is just for illustration purposes. Remember I told you guys about the critical, chronic, and terminal illness rider? If you fall sick critically, chronically, or terminally, you can take out of your death benefit. We call that accelerated death benefit rider. That can serve as income replacement. Okay, that sounds awesome, right? Now, to see the numbers, we are looking at retiring with $1 million at the age of 67. How much do you need to contribute every month to this plan to make that happen? That's what I'm about to show. That's what I'm about to show. Now, can you guys see my screen?
Yep.
Okay, awesome. Thank you. Now, see what happens. Now, this client have $1 million legacy, which can also be regarded as an asset. And I'll tell you why I say that. Now, to make sure this client retire with $1 million tax-free, 40-year-old male, they will be contributing $1,578 monthly to this plan. Okay? You don't have to start with this. You can start with whatever you are comfortable with. You can also go higher, depending on what you want to achieve. But this is what I want you to see. What is in it for this client in the long and short term? What is in it for this client in the long and short term? Short term, right now, if this person applies for this plan and fortunately gets approved, if they pay $1,500 initial payment, they have an instituted legacy, an instituted asset of $1 million from that moment. What does that mean? If they die the next day, $1 million will go to the family tax-free. The company is bound to pay $1 million to the company's to the beneficiary's tax-free by just making an initial deposit of $1,500. Make sense? That's one. Number two, if this client gets sick, critically, chronically, or terminally, to the point that they can't walk, all right? 6 months, 1 year, long term, and above long term, they will lose their income, correct? They can access up to 90% of $1 million in their lifetime. What do I mean? For critical illness, this client can take up to 24% annually of $1 million. 24% of $1 million is $240,000. So even if the client can no longer work during that period of critical illness, they will have a lot of funds to take care of their bills and take care of their family. If it's a chronic illness, this client can take out 2% of the death benefit monthly. That is about $20,000 monthly. Now, I know some of you are saying, Solomon, I have disability insurance at work. I have this. Let me tell you what disability insurance can do for you. If you have a disability, all right, you are out of work, disability insurance pays you not more than what's like the best they can do for you is to pay you 40% of your income. Now, somebody who is active and is making $5,000 monthly, he's already struggling with $5,000. Now, when they fall sick, they need more money. You are now paying them 40% of $5,000. Isn't that horrible? Do you think your disability insurance can take you? I want you to have a rethink. But in the case of this, you can get 24% of your death benefit. Imagine, regardless of how much premium you've contributed, you've paid into this plan. That is for the now. How about the future? How about the future? If you keep paying this premium, which is just about $18,000, all right, every year, in 27 years, all right, if you were saving $18,000 in a bank for 27 years, what you will get is $500,000, $511,000, okay? But because you are saving it in an IUL, look at what happens. The IUL has compound interest, and you are not making losses at any point in time. You are going to retire with actually, you will retire with $2 million. But you know what? You can access $1 million tax-free from this account. You can access $1 million tax-free, and your family also have $1 million legacy in case something happens. Isn't that amazing? That is it. as simple as ABC. This plan is a no-brainer. With this plan, we can change our financial fortune forever. With this plan, we can wipe out poverty from generations yet unborn. With this plan, we can protect our retirement tax-free. With this plan, we can protect our family right from when we get approved. Like right now, we can protect our family. And we can also protect our income in the event that we fall sick critically, chronically, or terminally. Now, I know you guys have a lot of questions. Like I said, this is just an overview. Please get back to Dr. Daniel. Schedule a one-on-one appointment with us. We will show you exactly what fits you, what fits your financial situation and your financial needs. So thank you very much for attending. Thank you guys for taking our time, to attend this, and for also making sure that you honored your guest, you honored your host, Dr. Daniel. So Daniel, I'm so excited to do this with you. Please get back to everybody on this call. Let them schedule a one-on-one appointment so that we can show them exactly what to do to protect their family, their health, their income, and their retirement tax-free. Thank you.
Thank you for the presentation.
Wow.
You're welcome, sir.
Thank you, sir. Yeah. Thank you, all my friends and guests. There's a link in the chat. It goes through the DIFTA-G Finlit. If you click on it, it kind of takes you, and then we also let you say, get your free consultation. You can go through that link and just schedule any of the dates. We should be able to get, like do one-on-one, whatever of the products that you find interesting that fits your needs. We'll be able to work with you and show you the right companies that will be willing to work with you. Our part is just to kind of punch you in the right place, show you the numbers, and help you make that decision. At the end of the day, you end up controlling your access to your account. If there's anything else like, down the line, just like you having a bank account, literally, you're able to have your access. And as my boss, Dr. Aliyu, thank you so much for this powerful presentation. I know that you always bring it home, and I'm sure you all can feel the passion. No matter the number of times I hear him speak, I get like truly motivated, and I still say, how come I never knew this? Yes. And that was just the biggest thing. And the kind of person I am, I try to dive in and do the research, and literally, I feel there's a big need to just spread this, especially within our community. It's no longer the time for, something happens, as friends, WhatsApp group, set up WhatsApp group. And if we're not able to get that, then something doesn't happen. No, with this, things just have to be different. I mean, I have neighbors that seem like they don't work, and simply just told me, Daniel, you just have to work smart. And of course, you can tell they're white people, and showed me a few things. And that's when I went, like searching, and literally came in contact with Ari and, like Solomon, and I'm just blown away. And I hope you can see some of the reason why we're doing this. So thank you all. Thank you for being here. And if you have any questions, we're willing to take them and just, go from there.
Yeah, I want to thank the presenter for his presentation. I would like to arrange one-on-one discussion with him about retirement in particular. and how to move money from a savings account in the bank, which yields little or no interest,
Yeah.
to any other plan that will yield more money.
Okay.
Number two, how to move money out of stock market into a different account that will yield more interest annually for my retirement.
Yeah. All right, Dr. Foreman, no problem. So like if you've seen the link, I did put the website. Click on it. There's going to be, we schedule a time. So that way you can just secure any particular date on there. So there's a link in the chat. And I can send it to you personally as well. So
Yeah,
that
please send it, because I don't know how to see the link, and I'm not seeing the link in the chat.
Yes. So
Okay, I see something in the chat. Yes.
mhm.
Okay, if you want one-on-one to further explain, I see a link there.
Yes.
Divert divtech.com. Okay.
/ Finlit is just financial literacy. So it also went to your phone personally.
Okay.
Yeah.
Yeah, okay. I will do that later on. But the other thing is that he didn't talk about the fees.
Okay.
If you have to do business with him, because sometimes these
So
people take a lot of fees.
we don't
Uh,
take we don't take any fees from you. It's actually so we don't have any. That's why I put it there. Free consultation, right? There are no hidden. There's not going to come out and say, Dr. Foreman, give us like this. No, there's none of that. Okay. So
No, not his fee in particular. I've had experience maybe some 12 years ago, when some money managers or financial people who came to us as doctors in where I do my hospitalist job. And a lot of us were invested in them, you know.
I don't know if you can hear me. Can you hear me?
Yeah.
Can you hear me, sir?
Yes.
So this is what we are going to do. All right. I just did an overview. We don't really, when we do overview like this, we don't really take questions. That's the essence of the one-on-one that we have. All right. I'll send you my contact as well, or I put it on the chat. I know we have a link on there. We'll schedule an appointment one-on-one that we can take all of these questions, because some of these people on this call came here before 1 p.m. We don't want to take much of their time.
Yes.
Right? So we'll do one-on-one with you, even if it is 2 hours with you. We're going to do it. Answer all your questions.
It will be very brief. It will be brief.
Yeah.
It won't take more than that. I understand everything you're saying. Yeah.
Awesome. All right. So thank you guys for attending once again. Please have a wonderful day. We look forward to having that one-on-one appointment with you. All right, Doc.
Thank you.
So I know like some of my friends are still joining. So most of you late bloomers, if you want, we can, I can drop, I recorded most of the presentation. So I can send out the presentation recording for all those that missed this. It is something that you really want to go back and watch if you're okay with that. So we can do that. I see Ndukwe just kind of, okay, definitely Kemka, I will. I see that. I'll just create a link and maybe even put it on the website itself and then just send the link out, and then we're able to just go back to that website and just go through it again.
Yes. All right. Thanks for the invitation.
Yes, sir.
Yeah. All right. Yeah. We'll get in touch.
Okay, good. So any other other question, anyone still on? I see we still have quite a few. Anyone that has any pressing? Chigozie, how are you? Yeah. All right. So thank you, guys. I really appreciate. And thank you for honoring myself and my wife to be here. And you'll have a great Saturday. Anything that anyone wants to say?
Thank you for the invitation once more.
All right. Thank you. Bye-bye.
Okay, bye. Okay, more. I got a lot of